Hello, folks. Welcome to this week's Forex commentary. Yeah, and happy new week. So last week we talked about dollar index, and I think we said a number of things last week. I for one recall that I mentioned that the draw on liquidity on the monthly chart is this monthly fair value gap here, the entry into the monthly gap. Okay, and before I continue, if you're new to the channel, kindly subscribe and turn on post notifications. I upload my YouTube commentary every week, and I am currently having an ongoing mentorship being uploaded to my YouTube channel. In fact, the next module drops this week, so kindly subscribe, turn on your post notification, and like this video. And thank you guys for supporting the channel. I mean, if you don't know, whenever you put on those likes, you're helping the YouTube algorithm recognize that it's actually great content, and automatically they would recommend my channel to new folks. You understand? So your like actually is a way of supporting my channel. So please, like and share, and do all of the beautiful stuff you can on the channel, and I'm grateful. All right, back to it. So last week we were talking about this discount monthly fair value gap here, and we talked about a number of things really, and but yeah, you can see markets finally trading into this gap. This is discount gap, and the question is, what's going to happen next? Because we seem to have had a swell time this month, March, because of this insane price action. I think 2 weeks prior. If we go down to the weekly time frame, you'd see that there wasn't so much trading last week, and that was the reason why I was talking about the fact that if someone thinks that the market last week would expand like this, I mean, that's a very unrealistic expectation, right? Because this doesn't happen every now and then. And of course, we have the monthly sell side objective, which is monthly fair value gap here. So one of the things I talked about is, we could see the market return into the previous weekly low, sell side, and possibly return back into the range where I was eyeballing this level. And that's why on my Twitter account, I think on Tuesday, I was talking about, the 103.049 as the least path of resistance, because if we study the daily time frame, you understand why I was talking about this level to be a low resistance liquidity run. All right, so so now this week, I'm still maintaining the same bias like I did last week, okay? Because last week I said markets could potentially trade into this low because of one of the things going through my mind was if you look at the volume in the previous week, that's this week, it's really difficult to really think that last week we just opened to be bullish. But funnily, if you check correlated pairs like USHF was bullish last week, okay? And I was thinking that okay, maybe the markets could likely return into this previous weekly low first. That's this monthly fair value gap, discount fair value gap, because because of we're bearish on dollar index, okay? But it's not really about you're bearish and stuff, because even in bear markets, you can have up candles in bear markets, right? And basically, so I wanted to see markets trade here into this gap, and possibly return back into the range. And if you study last week's closing price, Okay, if you check last week closing price, markets closed inside of the previous week's range, kind of like rejected here after trading into the previous monthly low, closing inside the range of the previous week. Now, this is looking like we could potentially see markets return into here. Okay, because this level here, because of this gap, seem like the obvious draw on liquidity to me. Okay, but before I can think the markets are going to trade here, the daily time frame really has to validate that markets, are going to be bullish, because number one, even if the markets will return here, I'm very sure that at some point this week, say markets are going to trade here, when the markets run above previous weekly high, that's your first objective. Okay, really, that's the first objective, because we cannot determine how far the markets really are going to make their retracement, but based off of signatures and price action, we can make that call. But it still doesn't mean that the markets would, it's all said and done and prices are going to return here. Okay, we talked about this level here being void of buy side. Although if you check, capital.com and stuff, you really aren't going to see the same thing. Okay, what you're going to see is, a BC, a buy side imbalance, sell side inefficiency, right? And here you see a sell side imbalance, like a liquidity void here. So it still doesn't invalidate the fact that you do not deliver price. You don't, the algorithm doesn't efficiently deliver price through another inefficiency. Okay, because this becomes a balanced price range. Do you understand? This becomes a balanced price range. So it's, even if it's not, like this one, but it's got a meaning. You don't, rebalance an inefficiency with another inefficiency. It doesn't make sense. Okay. So that's the whole point of it. And that being said, we're gonna go through the daily chart, because I'm thinking that the weekly time frame still suggests that the markets trade higher into 104,325. Okay, that's on capital.com, because if you check the balance price range in TVC, I think it's sort of different. I kind of like, so it's 104,636. Okay, yeah, it's 104,325. So it just depends on what you're using. Okay, I mean, earlier this year the market, we're having very funny price action, so I started using two charts to look at dollar index. I mean, the early portion of this year, wasn't it? So yeah, so this was what I was talking about last week. If you check my Twitter account on Tuesday, and if you look at Monday's price action, you can see Monday's price action. Monday's price action was bullish, but of course indecisive. So it's indecisive though, so it doesn't really give off so much meaning, you understand, except if you understand what indecisive candles mean. And because I'm thinking that we could return into this gap, and market was indecisive on Monday, and you can see markets traded into a near-term imbalance. Okay, this was an old new day opening gap, and if you extend it forward, you can see how the market hit it, still close below the new day opening gap. And I understand that whenever prices are below opening gaps, it's just salient to bearish price action. Okay, because how you can be sure that the markets are going to run higher, of course, is if prices are above the new day opening gap. Do you understand? So, but when markets are still below the opening gaps, that's bearish. All right. And recall we have this monthly discount fair value gap here, drawn liquidity, and it's not like we have anything to support the markets from the previous day's range. That's from Friday's range. Okay, there was nothing that I could use to validate any support. So while market is finding it difficult to run through or run higher here, okay, the market would easily reach for sell side. And now that this was indecisive, so if I'm bullish, I want to see the market straight into this candle slope first and then run higher then. Do you understand? So that's like the concept through which I framed the analysis on Tuesday on my Twitter account when I was talking about, sell side here at 103.20 and 103.049. Okay. We can check. Just gonna check that quickly. So you can see what exactly I'm talking about. What should I expose? I'm just gonna expose my network and stuff. Oh, gold finally 3,000. All right. So yes. So I was talking on my Twitter saying looks to me that 103.20 and potentially 103.049 are part of least resistance today. And if you check through, oh, I even give more details. Okay. I was talking about first, the monthly gap, which is the draw on liquidity here, 103.049. That's the draw on liquidity. All right. Recall because I'm tagging my YouTube commentary from last week, and I also talked about here. So you can see this is indecisive. So when markets are indecisive, I always reference primarily the high and the low of the previous range. Okay, and after that, I'm showing you this, the new day opening gap, to say that the markets are still below the new day opening gap, the old new day opening gap, and the markets are finding resistance here. Okay, you can see this candle closed below the new day opening gap resistance. This made a retest of it and still closed below its resistance, although indecisive. So not really so much you can glean from this candle's range. But when you go into the intraday chart, that's when you go into the 2-hour time frame, you see the market made a high inside the new day opening gap, made a rejection, made a next high, rejected, and made another high and a rejection. Okay, and when you see this kind of pattern, this three drive, okay, you want to see markets make a reversal primarily. Okay, it's a reversal kind of pattern. It's an old retail concept. And for this particular day, you can see there's a new day opening gap, just like that gap, but not as as obvious as that gap. And you can see the market trade into it, and market is showing sponsorship at what key time of day? This 2:30 Eastern Standard Time, London Q zone. Okay, at key time of day, you're seeing sponsorship. And then the idea is that markets would what trade into what previous day's low, 103.20, and potentially where 103.049, because this is the monthly draw on liquidity. So you can see, and since we had that price action really, we haven't seen much, okay, on dollar index since then. Okay, we haven't seen much. Yeah, we saw a green candle here, another green candle here, and my expectation on Friday would be for market to trade in basically above the new day opening gap, so that it can be easy for me to just look at the charts on Monday and quickly validate, okay, let's rebalance this and we can have a continuation on the weekly time frame. Because what we're trying to do here is we want to make a continuation. We're looking for levels that we can get in and continue this weekly buys, okay, because we're bearish basically. So we are trying to find areas, high time frame key levels. Like I said last week, ideal level we want to see the market straight into for a continuation would be here. Okay, and I gave the explanation last week. And I was talking about near-term imbalance. When when trending conditions, the markets will return to near-term levels of inefficiencies. And also I was talking about how this level is primed because of it's void of buy side. Okay, buy side delivery. All right. So what do I want to see on the daily chart? Because the daily chart has to trade in a certain way before I can validate my expectations. Okay. For example, one of the things I want to see is, say we have a daily order block form here. And how is the order block going to form? Well, say peradventure, we have, a daily candle close above the bodies of this candle. That's Tuesday's candle. That means the candle that traded into sell side 103049, sell side here, that's Monday's low and Friday's low into the monthly fair value gap. If we have a bullish candle close through the bodies of this candle, so we would be seeing a change in state and delivery. Now, mind you, change in state and delivery validates an order block. Okay, the two things you want to see for an order block, what really makes qualifies an order block. Number one, you want to see the market change its state and delivery. One, two, you want to see it run liquidity. Okay, those are very two key concepts when you are looking for order blocks. And more so, an order block that has a fair value gap is high probability as well. Do you understand? But one of the key things that validates an order block, because even in consolidations, you need to be able to define your order block, right? So you might not necessarily get the fair value gap, but the fair value gap makes it high probability. But one of the core concepts you want to see around your order block, like I said, you want to see the market's change its state in delivery before the order block was created, and you want to see it run liquidity. Okay, those are very key algorithmic concepts for your order block. And now that we've talked about what we want to see on the daily chart, we understand that this is resistance. Okay, but if we can see the markets close through this candle, you can see how the market has been failing. Okay, market has been failing, run above previous days high, reject, run above previous days high here, reject, still inside the range. You can see it's looking like the markets are still not looking like the markets are still within the range of Tuesday, which is not very good for a bullish price action. Really, that's the truth. It's not looking healthy for a bullish price action. And the only reason why we still want to see is because, number one, there's a weekly gap. Okay, and the closing price of last week's candle, kind of like you see the rejection and the settlement within the prior candles range. Okay, so that's why we're seeing that there's still some level of rejection, and we might see upside on dollar index in quotes. All right, so having made consideration for upside, well, we could be wrong and markets could want to revisit the previous weekly low again. But you can see it's not exactly high probability condition, because how can I validate markets trading into previous low? Yeah, it's primarily the same thing, but it's in reverse, because we have 1, 2 up candles. So we want to see a candle close below the bodies of these consecutive up candles to validate a change in state in delivery on the daily chart. So then we can mean, okay, the markets are likely to return into the previous weekly low. And then when markets return to previous weekly low, I don't know how the candle is going to form. I don't know if this happens and the markets trade into previous weekly low, we're going to see sudden, quick rejection. I don't know. Or we're going to see a strong body close below this low, and then it can now validate more continuation on the daily chart. You understand? That I simply do not know, because what the weekly time frame is showing that the markets are likely to make a continuation, and we have an ideal level I expect the markets to trade into. Okay, and we have a sense of what the daily chart would look like if the daily time frame begins to validate that bias. Okay, so now we have bias. We still understand that there's a way the markets are going to trade that validates that bias or not. And when the markets in fact validate that bias, we know what to do. Just blend in the tools and look for setups. And the market doesn't validate that bias, we still remember that the higher time frame institutional order flow is bearish. And if you're having issues with high time frame institutional order flow, well, I dropped how to define order flow based off of the Columbia of Traders report to the mentorship. And I think this week we're going to drop the part 2, like a supplementary lesson, or the qualitative analysis variants to defining the high time from institutional order flow. So I think I said enough already on dollar index. Let's move to pound. For pound, I always talked about this level, weeks for weeks, and we can see very similar to DXY. And why am I talking about pound? Well, euro pound currently looks bullish. If you check the euro pound, you can see the euro pound seems to be bullish. Although euro pound is one tricky pair, really, I really do not fancy euro pound. Okay, you can see there's a fair value gap here, so relatively equal highs. But euro pound is still bearish, because I think if euro pound trades into this gap, we're going to see it, just sell off. That's what I think, because euro pound is very bearish and is bearish. So this is the draw, and euro pound can really surprise me by trading here. I don't know. You get, although we have inverted this fair value gap here, and it's looking like there will just be a continuation here, but I do not trust the pair, and that's why I don't really like talking about it. I just like to have a generalized perspective of what bias is, and I just do that. And it's really unhealthy, because the intraday delivery really affects cross currencies, or even the majors like Euro USD and GBP USD, especially when the dollar is in consolidation. Because when dollar is in consolidation, Euro USD and GU, they fall into their relative strength. Which one of them is stronger and which one is weaker? Whichever language you want to use to define their relative strength, from the perspective of which is stronger or which is weaker. You understand what I'm trying to say? So when dollar index is consolidation, well, they are always susceptible to whatever is happening on the euro pound. You understand? And because of that, even if you have a longer term prognostication on euro pound, it would really affect your expectations on GU and euro USD. So I'm still looking at markets returning to this level here, this old weekly gap, below sell side here, and market structure has been giving off bullish. You can see markets trading above previous weekly high, but you can see what happens when markets trade below previous weekly low here. Well, since we're bullish, this isn't ideal, so markets makes a continuation. Yeah. We're going to talk about market structure, but not in this commentary, please. So yeah, I'm still looking at this gap here. Still looking at that gap. Still think the markets can potentially return into this gap here, running sell side here. But you can see this is a high resistance liquidity run kind of scenario, because the markets, this is a bullish order block, and this order block has run liquidity here, and this order block has validated a change in state in delivery on this candle. You can see. So this is exactly what I'm talking about, what an order block, what an ideal order block should look like. Okay, you can see trades sell side liquidity here below this candle's low into this fair value gap. This candle close above the bodies of this one, and this is an order block. So you can see when markets makes a retracement into this down candle, you can see we had a bullish day on Wednesday. Okay, so yeah, so you can see this is high resistance scenario, and I don't know how this week is going to pan out. So you can see it's either you wait for dollar index to validate, and it's not either, it's either you wait. You've got to wait for the dollar index to validate your buys before you can really do anything, because the markets could still potentially respect this order block and run into objective here, or markets could trade into previous weekly high and still sell off here, because this seemed like the obvious draw on the curve. Okay, like internal range, it looks like the market ought to return here based off of the dollar index for an ideal continuation. But if they want to leave all of the inefficiencies and probably trade into them at a later time, that's still fine. And that's why we have expectations on the daily chart. Okay. Yep. So basically the same thing on euro, which euro pound has been bullish, so euro has been very, very expensive. And yeah, it's just about, now mind you, this level here is a monthly gap. Okay, this is the old monthly gap, and since we've gone through this monthly gap and traded into this premium gap, so I'm thinking markets could potentially return here for support, which is this level on the weekly time frame. Okay, you can see there's a level on the weekly time frame, the weekly gap, and all of that. Okay, everything overlapping each other, and basically just want to see what happens this week. So if you found this one insightful, give it a like, subscribe, share with friends, and all of that beautiful stuff. And I will see you in the mentorship during the week. Until then, be safe.